Hey folks, Dan Frio here with your real estate news for July 28th, 2025. So what we're going to talk about in today's video, we're going to go over President Trump signing an agreement with the EU on tariffs. We're going to talk about that briefly and how the markets aren't reacting like I thought they would be. We're also going to talk about the Federal Reserve. Yes, they are coming out in 2 days telling us exactly what they're going to do. And then we're also going to break down this week's economic calendar because it's full of information that the Federal Reserve monitors, and that data is right across here. So without further ado, folks, let's get to it. My name is Dan Frio. I do this report twice a day to inform you guys what in the heck's going on with these, but specifically the whys behind it. Because if you're watching this video, most likely you're looking to buy or refinance, or maybe you're a realtor out there trying to understand the markets. So let's get to today's news and this week's news on how those will be affecting these over through here. So let's get over to it, folks. In 2 days, the Federal Reserve is going to come out and they're going to tell us what they're going to do. Well, I'll be a spoiler alert here, and I'll give you exactly what they're going to do at this meeting. Now, the future meetings those are the ones in question. So let's first break this down. Federal Reserve, here's what they focus in on. Inflation, when they're looking at that, they look at the PCE. Unemployment, they're going to look at the unemployment rate and then also the GDP. And based on this information, they're going to change or do something with this rate right here. And this is the federal funds rate. Okay, so here's what we're looking at right now. The Federal Reserve isn't really expected to do anything at the next meeting. There's a 96% probability that they're not going to cut rates. So when are they going to cut and how much are they going to cut? That's what we're trying to figure out. Now, the markets are telling us they're going to cut in September and then maybe one more time this year or maybe push it till next year. That's what we're trying to figure out. We're trying to take the data they're monitoring right through here, but we also have news in regards to tariffs. Now, this was kind of a shock. I thought when we got a settlement on the tariffs with the EU right through here, stock futures show small gains as US-EU trade deal kicks off hectic week for the markets. Not really quite sure why this didn't really spike better than it was expected, because you have the Dow Jones, it's basically doing nothing. Look at the across the board. The indices aren't doing a thing. They're not doing right here. Okay, we got the VIX up 2% to 15. That's still not really anything to write home about, because we're still, once you get to 20, 30, that's when you start freaking out here. Let's look at oil, see what oil's doing for the day. It is up 2% to $66. Don't like that. That's inflationary. It's just for kicks. Let's go over to crypto. It's down a little bit. But let's get over to see what the markets are looking at. Here's the economic calendar we have for the week. So far, we have a trade agreement with the EU. That was kind of like, because they didn't know if there was going to be an agreement there or what it was going to be. And then they thought maybe the tariff rate was going to be about 30% or 50%. It actually came in at 15%. So much lower than expected. So I thought the markets would react a little bit better to this news, but it didn't. So let's get over to some of the economic news we have through the week that might be affecting these things over here. So let's get over to it. We have on the economic calendar today, we have a 2-year and a 5-year bond auction. This is they're getting rid of a whole bunch of our government debt. So we're going to see how much rates do they need to increase? Do they need to stabilize, or can they actually sell off all this debt at lower rates? So we'll focus in on that a little bit at the closing bell. Then on Tuesday, here's where a lot of the data starts to fill in. We have retail inventory, we have the consumer confidence, we have the JOLT index. That's what's coming in on Tuesday. This gives us job openings and labor transfers and consumer confidence. A little bit of a gauge there. Don't really think that should move the markets tremendously. Then Wednesday, we get the ADP payroll numbers. Well, I'm going to start throwing this out with the trash because these numbers are not really good and not very consistent. So we'll look and see how this comes in, but I'm not really saying that that's going to be a market mover for the day. Here's what's going to be looked at. We're going to get GDP. We're going to focus in on that, GDP Q over QQ and price index. Then the PCE right here, that's the number one inflation gauge that the Federal Reserve monitors. It's actually coming in on Thursday. So it's coming in the day after the Federal Reserve comes out and tells us what they're going to do. Now, this is where a lot of the data starts to fill in. I wish we had prior to the Fed meeting, because let's look at this. We have continued jobless claims coming in, so that gives us a reading on the jobs report. Then you have the PCE number, employment cost index, initial jobless claims, and that's it for that day. Then on Thursday is when we start getting average hourly earnings, private payroll numbers, the unemployment rate. So look at this data that's coming in the next 2 days. Latter part of the week, though, is going to play a role in here. We're going to get the PCE. Is that going up or down? Last time it went from a 2.1 to a 2.3. That was a kind kind of a little shock. Is unemployment going to spike, or is it going to stay right intact where it is today? And is GDP, is the economy starting to grow a little bit faster than was expected? So that's what we're going to focus in on. All this data is coming in throughout the week. We also want to start focusing in on earnings reports, and here's why. As the tariffs start hitting our economy, this is the area it's going to hit most. What are corporations going to do? Are they going to pass on the price tariffs or the price hikes to consumers, thus continuing to increase their profit margins? Are they going to have to cut prices and then deteriorate their price margins and then maybe start the unemployment rates? Well, that's what we're going to focus in on, because this week we have probably the biggest number of S&P 500 companies coming out with earnings this week, and we're going to go over each day with you and see how those come in, because they start to take a bite out of this. You're going to see the market starting to deteriorate, then the jobs market may be falling off from there. But let's just think maybe the tariffs aren't a huge impact in the economy. These companies don't have to really price cut, and they can continue to keep their profit margins, and thus the economy stays somewhat stable, and we don't go into a recession. Jobs reports are staying intact, and your income might be okay. So there's two huge dynamics working behind the scenes right now. Which one is going to pan out? Well, that's what we focus in on a daily basis to see, is the economy going to crack based on all this information, or are we going to be maybe smooth sailing ahead? And that's what my expectations are. We're going to focus in on earnings reports later this week, but last week's earnings came in fantastic. So if you look at all this across the board, it doesn't look like a bad week for mortgage rates, because I'm expecting a lot of the numbers that the Federal Reserve monitors, like inflation, I don't think we're going to see a huge spike there. I don't think we're going to see a big spike in unemployment, and I think GDP is going to start growing right in line with the economy. So short term, I'm just saying, if you like rates where they are, lock in if you're looking to buy, and maybe, like they always say, marry the house, date the rate. What's actually coming in? A lot of people are saying, oh, that didn't work out very well. Well, back in December of 23, rates were 8. Today, where are rates? Well, they're back in the 6s. Not a lot, but at least it's about 1.25% lower than where we were about a year ago today. So that's our report for today, folks. So overall, the markets are probably going to be basically stable today. There's really not enough news out there to shock the markets, and I thought the EU deal was going to be a little bit better than expected, but it wasn't. So right now we're seeing the markets basically just stabilized, just waiting to see what the next catalyst is from Trump, the Federal Reserve, and corporate earnings, and how they'll play a role in these things over through here. So folks, my name is Dan Frio. I do this report twice a day to inform you guys what's going on with these. Let's go over a short-term, mid-term, and a long-term review. Short-term, if you're looking to buy and you're closing within 30 days, don't try to time it. Just lock in at what you got and run forward. If you're looking to close maybe 60, 90, 120 days out, I'd be sitting on the sidelines just a little bit to see if you can get a little bit of a pullback. I don't think anything major. I'm not seeing rates getting into the 5s anytime soon. I would be happy if we can just get around 6.5 on the 30-year fixed rate, and I think that would open up a lot of the markets, especially for purchases and refinance. Are we going to get there? Well, I think over the midterm, we might be getting close. Long term, when you get to the latter part of 2025, early part of 2026, that's where you might start seeing a lot of these movements into lower and lower rates ahead. But that's our report for today. What's actually going to happen? Well, I don't know, and that's why you need to come back at the closing bell to see how all this mess ended for the day. So, folks, my name is Dan Frio. I do this report twice a day to inform you guys what's going on. And the reason why is I'm actually a federally licensed mortgage loan officer. What that means, I'm licensed in all 50 states as well as Puerto Rico. I'd love to be able to help you out there navigate the buying process or the refinancing process. I've been doing this for over 35 years. I would love to help you. Then the other piece of this equation is, yes, if I'm in every state out there, basically, if you're watching this, I'd love to be able to help you. But also we have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, it's pretty simple. The bank I work at, it's a federal bank. We're set up with 33 other lenders. They're banks, credit unions, and other just mortgage lenders. Why did we do that? What's to help you guys? Okay, if you're out there looking for a mortgage, what are you truly looking for? You're trying to find somebody you can know and trust. Well, hopefully you keep watching my videos, watch 20, 30, 40 of them. You'll kind of get to know me. And now, how can you use me, and would it behoove you or benefit you to use me? Well, we have a slogan. Like I said, one application, one credit pool. We're going to shop your loan over 30 different lenders. My bank is set up with 30 other lenders. I have the option to use their programs, their rates, and things like this. One of the lenders we have right now has a program for up to $7,000 if you're looking to buy a house. Check out that. You might qualify for that loan. Or if you're looking to refinance, click out the refinance tab right up through here. It's going to teach you how to set up your interest rate in our system. So when the rate gets to the point where you're looking to refinance, I'll be giving you a call. We can work through the numbers, see if it's in savings enough for you, and then we'll get the paperwork started. So if you're looking to purchase, refinance, or maybe even looking for a home equity loan, hopefully we can help you out, because we also just added a 5-day HELOC on our website right through here. It's 100% online, done online. You pick the program, you pick the rate, you pick the fees, you pick your term, and you can do this all within 5 business days. So thanks for watching, folks. God bless. Have a fantastic afternoon. I'll see you here at the closing bell to let you know how this mess ends for the day. Thanks for watching, folks. God bless. See you later. Bye-bye.